Hey everyone, this is Jeb Graham with Metcalf Partners Wealth Management, and this is a Metcalf Money Moment for this month. What I want to talk about today is we're in the middle of October, and within the last week, I think all three major indexes, the S&P 500, the Nasdaq, and the Dow Jones Industrial Average, have all hit year-to-date lows, which is saying a lot because they've been down all year, and so now we've this last year hit a couple of new lows. And what I want to do is talk about one silver lining of a down market and then also give you a little bit of reason for optimism going forward. So the silver lining is if you think about a stock that you own or any stock fund that pays dividends, uh, most of those funds and stocks are continuing to pay the dividends because they're continuing to make money through this down market, even though the valuation of their stock is down. A silver lining is that if you are reinvesting those dividends, it's important to remember that you're now reinvesting. So, say your stock is paying a $2 dividend. Well, now you're taking those $2 and you're purchasing more shares of that stock at a lower value than what it was trading at a few months ago. So if that stock goes back up to where it was before, which hopefully with many stocks that's going to happen, in essence, you're going to have a larger investment in that stock because you've had the opportunity to reinvest dividends and buy low at this lower level. So that's one silver lining of a down market in general. And then reason for optimism, according to JP Morgan Guide to the Markets, which they put out a guide that comes out monthly and quarterly, and they do what's called the forward PE ratio of the S&P 500. What that is the price to earnings ratio of the S&P 500. So it's the average price of an S&P 500 stock divided by the average earnings of the S&P 500 companies. And it's a good gauge of whether stocks are trading cheaply or expensively. And right now, the forward PE ratio, according to JP Morgan Guide to the Markets, is 15.5. The average PE ratio historically is around 17. And if you look back to December, when this market started to go down, the S&P 500 was at a forward PE ratio of about 23. So right now, what that's saying is that stocks are trading at a much cheaper level than they were at the end of last year. And they're also trading at a cheaper level than historical averages. So that's always when we're in a bear market. In a down market, that's a good threshold to cross over to have stocks trading cheaper relative to earnings than they had been in the past. So hopefully this gives you a little bit of reason for optimism and that silver lining of reinvesting dividends. And it's also, of course, possibly a really good time if you have cash sitting on the sidelines to think about investing that in a long-term investment in the stock market when historical PE ratios are below average. So this has been a Metcalf Money Moment. If you have any questions, please don't hesitate to call us, and we hope to talk to you soon. Thanks.